Welcome to the deep dive. Today we're going to dig into something pretty ambitious. We're looking at Mexico's plan for a digital peso, which is being developed by Banxico, their central bank.
And this isn't just about creating, digital money. The real mission here is to tackle a massive, deep-rooted problem. A huge part of the economy is completely cash-based.
So it's about financial inclusion. Let's put a number on that. How big is the challenge we're talking about?
It's huge. We're talking only around 55% of adults in the entire country having a bank account. And in the poorer southern states, that number is much, much lower.
Okay, but here's the thing that seems like a paradox to me. Mexico already has SPEI. It's a 247 super-fast interbank system. So if that's already there and it works, why build a whole new CBDC?
That's the key question. SPEI is great, but it really only serves the people who are already banked. The digital peso is designed to be different. It's supposed to be like actual digital cash.
Digital cash. So a direct liability of the central bank.
Exactly. Risk-free. And that trust factor is important, but its real value is meant to be in reaching the places SPEI doesn't.
Which gets us straight to the big cultural barrier. Cash is absolutely king there. You think about those huge traditional open-air markets, the tianguis. They operate completely outside of any formal digital infrastructure. It's all face-to-face. It's immediate.
So for a digital peso to even have a chance,
It has to respect that. It needs to be simple. If it's complex, if it needs a perfect internet connection, it'll just be ignored. It has to feel as final and as easy as handing someone a bill.
And this is where the project, I think, runs into a major national issue, the infrastructure. Specifically, Mexico's electrical grid, the CFE, it's notoriously unstable.
It is. And we're talking frequent hours-long power outages that affect millions of people. How can a digital currency possibly function in that kind of environment?
Right. So what's the solution? There's only one. True offline payment functionality. It's not a bonus feature. It's an absolute must. You add that to the fact that almost half of rural households don't have internet, and you see it's non-negotiable.
Yeah. If the digital system dies every time the lights go out, then cash is just better, period.
It remains the superior backup.
Okay, so let's shift from physical resilience to financial resilience. What about the private banks? They must be worried about what they call fast disintermediation, right?
Oh, absolutely. The fear is that during a crisis, everyone would pull their money from commercial banks and flee to the safety of a risk-free CBDC account.
Causing a bank run, essentially.
It could trigger a systemic crisis, so Banxico has to build in protections, the main one being strict holding limits on individual accounts.
Okay, what kind of limits are we talking about?
Well, international suggestions are often in the range of, say, 1,500 to 3,000 euros, somewhere in that ballpark.
But wait, doesn't a low limit like that kind of defeat the purpose of inclusion? I mean, if you're trying to formalize an economy where people buy a used car with cash, that's not going to work.
It's a critical trade-off. It really is. The initial goal isn't to handle large transactions. It's for small daily payments. The idea is you build trust and adoption that way first, without destabilizing the whole banking sector.
Got it. Okay, last big topic, the ethical one. Privacy. The government wants better transaction monitoring for things like AML, but the public's #1 concern is being watched.
And public trust hinges entirely on this point. The design has to legally separate personal identity from transaction data. Banxico must not have direct access to see who spent what and where.
So it preserves that cash-like anonymity, but still allows for high-level monitoring for illicit activity.
That's the line they have to walk. It's the only way to get people on board.
So if we synthesize all of this, the digital peso really can't be a magic bullet for exclusion. It seems more like a catalyst. It has to happen alongside huge structural reforms.
That's it. You need to improve digital literacy, identification systems, and most of all, you have to fix the failing infrastructure. At the end of the day, distrust in institutions and that unreliable power grid. That's why people stick with physical cash.
Which leaves a really interesting question for you to think about. Given how fragile the national electrical grid is, physical cash is still the ultimate fallback. It's what works when nothing else does. So can a digital currency ever truly replace it? Or does physical cash have to remain a legally protected parallel option indefinitely? Something to mull over until our next deep dive.